Retiring early because of dividend-paying stocks and ETFs is something that a lot of dividend investors dream of. And even though by no means is dividend investing a get-rich-quick idea or scheme or anything of those sorts, it is possible. Take my situation for example. I currently am 32 years old and earn an estimated amount of around $91,000 per year in dividends. And at this point, I could, if I wanted to, completely retire free and clear off my dividend investing portfolio completely. Now, to be fully transparent, this dividend portfolio that you see right here on the screen is a portfolio that I've been building for around 8 years now, and the portfolio was started years ago with savings that I started with around 12 to 13 years ago. So it's not like this happened overnight, but with consistently buying dividend-paying stocks and ETFs over the past decade almost, reinvesting the dividends every single month and every single quarter, by this point at 32 years old, I am at the point to where I could retire early. Now, a few things in this, like I said, I was sort of lucky enough to have a little bit of savings on the side, as well as the fact that I got into dividend investing relatively early. But because I'm no one special, I know for a fact that a lot of other investors out there, if they invest in the right ETFs and or stocks and keep investing for long enough, could also potentially retire much earlier, say 10 or 20 years earlier than the average retiree. Now in this video, we're going to go through a few different specific dividend growth ETFs, and we're going to go through the math, and I'm going to share with you guys how these ETFs could set a relatively younger investor up to retire significantly early. So if you're a dividend investor looking to retire completely off dividend income sometime in the future, make sure to stick around, drop a like down below, and let's get right into this one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now there's of course so many different stocks and or ETFs that an investor could use, build up a position long term, and then retire off of that position later on in the future. But again, in this video, we're going to go through a few of my favorites. So the first dividend growth ETF that I think could be a potential ETF for an investor to buy into consistently over the years and use this as a position to retire potentially even early is the Vanguard High Dividend Yield ETF, ticker symbol VYM. And this is because just like all the rest of the ETFs we're going to talk about in today's video, this ETF has grown over time, offered a diversified basket of holdings, but on top of that, this ETF has offered a decent starting yield as far as dividends go, but also paid more and more in dividends over the years. But to back up for a second, VYM's product summary, it says seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. VYM has a 0.06% expense ratio, very cheap to hold on to, and has a massive portfolio with over 500 different individual stocks that give you exposure to almost every single sector across the market. Now, some of the top names in VYM, for example, are names like Broadcom, JP Morgan, names like ExxonMobil, Home Depot, different dividend growth names that have consistently been growing for the most part over the years and also been paying more and more in dividends consistently. Now, because of this, VYM has performed very well, especially over the last 10 or so years. It's up around 90% as far as price return goes, and this is not including dividends. VYM's up around 18% year to date and up around 19-20% over the 1 year. But the real magic on how an investor could retire much earlier by investing into dividend paying ETFs like this one is the fact that VYM offers almost a 3% starting yield, but on top of that has offered dividend growth anywhere from around 8% per year down to as low as 5% per year, and on average around 7% per year. Now this means that even if you have a relatively small amount invested into VYM, year after year VYM is going to pay you more and more in dividend income. At least that's what's happened historically. Now what this also means is that this is going to help you compound your portfolio significantly over the years, especially in theory if you got to a point to where you're owning hundreds if not thousands of shares of an ETF like this one. All in all, VYM is a great dividend growth ETF, one of the best across the entire market, and if you're looking to build a massive compounding snowball of a portfolio, definitely check out VYM. The next dividend growth ETF that could be used to build a portfolio, grow it significantly over time, and potentially even retire significantly early is an ETF that I built out a massive position in the last few years. We're talking about SCHD, or the Schwab US Dividend Equity ETF, an ETF that offers once again a high quality basket of holdings, but also has grown over time and paid more and more in dividends over the years. The objective for SCHD is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. The ETF is also low cost, just like VYM's, same price to hold on to it at 0.06%. And like I shared with you guys, this ETF has been one of my favorites personally across my portfolio, and I've been adding hundreds of shares throughout the last year. Now, SCHD also has grown significantly over time, up around 231% in the max time frame. Year to date, it's up around 10%, over the 1 year up around 15%, but also very important, especially for the context of this video, the dividend for SCHD is at around 3.5% with massive dividend growth historically. We're talking 11% dividend growth rate, 12% dividend growth rate. That means that you're getting more or less an 11 or 12% raise year after year just for holding onto shares shares of the ETF. Now I'm going to share with you in a second here the math behind this and share with you exactly how easily this can compound over time, even with a relatively small amount of money invested. And this is once again because as long as you hold on to shares, at least based off of historical numbers, the ETF just keeps paying you more and more year after year. Now to share with you what this could look like long term with a few different scenarios, with a $50,000 starting principal, a $1,200 on top of the annual contribution, so this is $100 per month, 3.5% initial dividend yield, 12% expected annual dividend amount increase, 7% share price increase every single year, quarterly distributions and drip being turned on, a $50,000 investment into SHD after just 10 years would be worth around $141,000 and around $7,600 per year in dividends. Now that's not necessarily enough to retire off of, but keep in mind if you wait just a few more years, you're getting sort of in the realm of where you could potentially even retire off of just a $50,000 initial principal investment. Now of course if you were to add $1,000 per month to the annual contribution with a $50,000 initial principal, it would take much less time. We're talking maybe 15-16 years till you're at the point to where you're surpassing most people's salary. Now again, depending on what your expenses are, what your situation is, and of course depending on what's going to happen with SHD or any investment for that matter in the future, there's a lot of things that are going to depend. But regardless, I just want to prove that at least in theory, an investor could invest into something that offers a massive dividend growth rate, or at least has historically, and turn a smallish portfolio into a massive one over the next say 10, 20, 30 years. Now this is also why it's very important to start investing early. I'm not the first one to say that, I'm probably not the last person to say that, but the sooner you get investing, the sooner you allow the power of compound interest to do its thing, and every single year you stay invested and reinvest those dividends, the portfolio is really going to grow until it seems like it has a mind of its own. Now one last ETF that I think could be a great ETF for an investor that wants to compound a portfolio and even potentially retire say 10, 20 years earlier than the 62-year average that we see across the board. Buying into shares of VIG, for example, the Vanguard Dividend Appreciation ETF, this is an ETF that's grown significantly over time and also paid dividends and more dividends too. The ETF's product summary says it seeks to track the performance of the S&P US Dividend Growers Index. And as far as the portfolio composition for VIG, it's around 330 different individual stocks, some of the best names across the markets. Names like Apple, Broadcom, Microsoft, lots of different individual names in here that have the potential to grow really quickly, but also pay dividends and also pay more and more in dividends over time. Now for these reasons, VIG is one of my new favorite holdings that I started buying maybe about 4 or 5 months back. I have a relatively small position of VIG, but it is one of my favorite ETFs across the market. I mean, look at how much it's grown over time. It's up around 300% as far as growth goes, and that's not even including the around 1.7% starting dividend yield and all the dividend growth investors have seen historically. So once again, just a perfect example of a dividend growth ETF that's grown consistently over time, offered exposure to a high quality basket of holdings, and paid more and more in dividends year after year for the most part to investors like you and I. Now, all this to say that I do think that there are so many investment vehicles out there that can at least potentially allow you to invest into them early on, stack more and more shares over time, and retire a lot earlier than what we're seeing as an average retirement age across the US. So now that we went through 3 individual different ETFs that I think could be potentially good options as far as buying into holding long term and allowing you to retire say 5, 10, 15, 20 years early, I lastly, most importantly, have a question for you guys down below. When it comes to retiring off of dividend paying stocks and ETFs, like I'm guessing a lot of you guys are trying to do, what's the number one stock or ETF that you're using as your retirement portfolio boost? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.